Good evening from Hong Kong, and good evening to my Asian colleagues and participants on the panel from here. A very good afternoon to Europe and an early good morning to the Americas. My name is Siddharth Tiwari. I'm in the BIS office in Hong Kong. This panel is on how development banks can address the massive needs for green projects. We have an amazing set of 6 leaders in the field who will talk about 6 important issues. So let me introduce the panel first, and then I will talk about the details. So moving in alphabetical order, the panelists are Erik Berglof, Chief Economist of the Asian Infrastructure Investment Bank. Welcome, Erik. You're on mute.
Thank you.
So next is Ambroise Fayolle, who's the Vice President of the European Investment Bank. Welcome, Ambroise.
Thank you. Welcome.
Next, Anshula Kant, who's the Managing Director and CFO of the World Bank Group. Welcome, Anshula.
Thank you. Hello, everyone.
And Xavier Musca, who's the Deputy CEO of Crédit Agricole and a long career of public service in this field. Welcome, Xavier. You're on mute also. I'll come back. You're still on mute. Let's move down. Nandita Parshad, who's Managing Director of Sustainable Infrastructure at EBRD. Welcome, Nandita.
Thank you, Siddharth.
And last but not the least, Rémy Rioux, who is the President of Agence Française de Développement and the Chairman of the International Development Finance Corporation. Welcome, Rémy.
Thanks a lot, Siddharth. Good to be with you.
Thank you. So when I started looking at how we should do the panel, the biggest challenge was that a panel with all of you as panelists, you have 180 years of professional experience between you, and we need to distill this experience into 60 minutes. So I'm going to give it a try. So for the audience, the discussion is structured around 2 segments of 30 minutes each on 2 key topics. 1, getting the architecture right. 2, on leveraging the private sector. In the first segment, that's getting the architecture right, there'll be 3 lead speakers. Nandita will start us off on how to support financing for low carbon pathways. Ambroise will follow with challenges for Paris alignment, and Anshula on the building blocks for an effective framework. After that, Xavier, Rémy, and Erik will comment on the leads, 4 minutes each. In the second segment, we'll reverse it, and the first 3 leads will be Erik on generating a pipeline of investable projects, Rémy on scaling up development financial institutions' own operations, and Xavier on capital market solutions to finance green infrastructure. So let's start with the first segment. We're going to start with Nandita on supporting financing for low carbon pathways. Nandita, the floor is yours.
Thank you. Thank you very much, Siddharth, and for this opportunity to join what I'm sure will be a fascinating discussion on what the development community needs to do collectively on the climate finance front. So the scale and nature of the climate challenge are well known. The numbers are staggering. Investments in order of trillions, mostly in emerging markets, are needed. However, the good news is the associated opportunity is also enormous. If we all commit to delivering the goals of the Paris Agreement, we create the enabling environment to unleash massive innovation and investment, generate high-quality jobs, open new markets, diversify economies, and build cleaner, more livable communities that prioritize sustainable growth. So it's really incumbent on us, development banks, multilateral institutions, to help create the conditions that can enable developing countries to unlock and reap the benefits of a transition to a net zero economy. So as economies and corporates aim for Paris alignment, we need to help governments, financial institutions, and key economic actors build the intelligent pathways needed to deliver their commitments while opening up new investment and growth opportunities. A crucial part of our role is also mobilizing private sector investment to deliver these. There is no shortage of capital looking for sustainable areas of investment. But what investors are looking for is the right opportunity. Countries where policymakers are making credible long-term commitments to the transition and also setting clear rules and strong regulatory frameworks on the back of these commitments. So therefore, while many development institutions like the EBRD are all stepping up our own financing commitments to the green economy, we need to go much beyond to create the opportunities to attract that capital to our developing countries and clients. And for that, multilateral development banks must leverage their policy dialogue toolkits, advising countries and corporate clients on how they get the best out of the transition and create the economic frameworks and conditions that can attract that private capital to transform their economies. Now, partnerships are critical for this kind of enhanced policy support. This has to build on the joint MDB climate-focused initiatives we have all undertaken together after COP15 in Copenhagen, from the first ever mitigation and adaptation-focused climate finance tracker in 2011 to the NDC partnership established at COP22 in Marrakesh, and our even more recent joint MDB approach to Paris alignment. So let me outline two specific ways we at EBRD believe we and other development actors can use our key comparative advantages: a strong presence in and understanding of our countries of operations, and our ability to work at the nexus between private and public sectors to mobilize private sector finance for the needed transition. So the first point I wanted to make is what we all need to do is scale up our policy advisory and capacity building assistance. At EBRD, we see this support as core to our value proposition and integral to unlocking investment. This goes hand in hand with our commitment to align all our operations and investments with the goals of the Paris Agreement by 31st December 2022. As the bank will only support those investments which are compatible with the Paris Agreement goals, we will need to significantly increase the support we offer to countries, sectors, and companies in designing their own pathways to meet the Paris Agreement goals. In particular, supporting the adoption and implementation of robust NDCs, long-term strategies, and low-carbon pathways in order to create investment opportunities and a pipeline of bankable projects. So the bank has already kick-started its work to deliver on these commitments. And let me share a few selected examples of ongoing and planned activities, together, of course, in many cases with many of our partners here with us today. So one is an example of where we're now supporting the Ukrainian government in the preparation and finalization of its second NDC, expected to be submitted to the UNFCCC ahead of COP26. Another is the development of an economy-wide long-term strategy for Uzbekistan in line with the provisions of the Paris Agreement, following the successful development already of a low-carbon pathway for the Uzbek energy sector, which has already generated enormous investment opportunities. And finally, let me share work that we're doing on a sector basis. And this is work ongoing on a global low-carbon pathway for the nitrogen fertilizer industry, prepared in partnership with the International Fertilizer Association and the IEA. This work, which we presented at COP26, builds on extensive engagement with global players in the sector, but will also be followed rapidly by a deep dive into Egypt's fertilizer industry, looking at how we can specifically identify what are the decarbonization needs of the sector in that country. And so coming to the second way we can help our clients use low carbon pathways to finance their green needs. And this is the growing potential of green capital markets. we see a real opportunity to use well-designed commitments to net zero or low-carbon pathways to develop green financial products for institutional investors. Products such as sustainability-linked bonds or green bonds, including transition bonds. These are applicable to many industries and companies, including hard-to-abate sectors, as they map their net zero trajectory, raising capital needed upfront for green investments, but linked to clear KPIs and milestones along an agreed pathway. And EBRD is doing this in two ways. First, by leveraging our own balance sheet as an anchor investor, and second, also as an issuer of such bonds ourselves. So as an anchor investor, our commitment can send a strong, comforting message of encouragement, but also validation of KPIs and Paris alignment to other private investors. Examples of some things we've done recently is our participation in Greece's PPC's sustainability-linked bond issue. This was a bond linked directly to the decarbonization commitments of a lignite-fired power company in Greece, but also many others, including a green bond for an aluminium company. And I think we're going to hear from Xavier later on some more creative ways in which MDBs can do more in green capital markets. But also touching briefly as an issuer, the EBRD, and we're not the only one, many MDBs are now issuing our own green bonds. We have issued about $1 billion so far of green transition bonds, the proceeds of which are specifically to finance projects in hard-to-abate sectors, including manufacturing, agribusiness, and even housing, linked to the implementation of low-carbon and resource-efficient strategies, together with measures, of course, to improve climate governance. And so let me just summarize and end here by saying the commitment and shift by MDBs to align with the goals of the Paris Agreement must be seen as a huge opportunity to use our range of policy and investment tools to generate a pipeline of bankable green investment projects and innovative green financial products. Thank you, Siddharth.
Thank you so much. Exactly on time. Now, Ambroise, on challenges to the Paris alignment, the floor is yours.
Thank you, Siddharth, and good afternoon, or good evening, or good morning to those who are listening to us. I mean, Nandita already said a lot of things that I would have said, so I'll be brief actually. I will start by saying which are the things that an NDB can have that differentiate an NDB from another financial institution. And I think there are two kind of specificities, if I may say so. The first one is we have long-term political goals of our shareholders. And the second one is we are patient investors. And that is particularly important when you talk about the greenization of the economy and reaching climate targets. And for the Bank of the European Union, the AIIB is the Bank of the European Union. Our shareholders are the member states of the European Union, having the Green Deal and the target to be by 2050 the first climate that would be climate neutral, the first continent to be climate neutral. It is absolutely essential for us to accompany these developments. And we have done that in a climate bank roadmap that was approved at the end of 2020, and that has quantitative targets that I will not develop, and qualitative targets. And actually the big qualitative target is the fact that we have decided that by as of January 2021, so now, all our projects that we finance have to be Paris aligned. And the idea beyond that is, it's good to have, and we have an objective of 50% climate target for projects to be financed by AIIB, but if the remaining, and we are not going to finance only climate projects, because there are many other priorities in Europe. If you finance other projects that are basically going in the other direction as the Paris Agreement, it's completely useless. So you need to be sure that even for projects that are not green, you do not significant harm to reaching the targets of the Paris Agreement. And for me, this is a very important component, maybe more long-term, than what we have already and many institutions do on the climate risk management, the climate risk measurement and monitoring. And it is an important component to the green investment strategy that we all have. So how do we measure Paris alignment these days? I mean, first, I would like to say that it has to rely on something that has an horrible name. This is taxonomy. Because what is important is that we speak the same language, that we understand, you know, if everybody defines for its institution what is green and what is not, that's not going to work, and that's not going to convince investors that we need to lead by example. So what we have decided is to follow the taxonomy, which is an exercise that is ongoing in Europe. And once the taxonomy is approved at the European level, we will apply that we will align basically our policy on the European Union taxonomy. And in the meantime, we have worked on the basis of what the technical experts that are preparing for the taxonomy have done. And we have defined a number of threshold targets, exclusion lists, sectors, etc., where we need to be in particular vigilant. So if I can just give a few examples, we have thresholds. For example, we are not financing anymore gas projects because we think this is not consistent with reaching the climate objectives of 2050. But we can finance gas projects when it includes a high level of green gas. So that's the first category of things, that there are thresholds above which we don't want to be investing, because we think they are, even if they are better than what was done before, they are not going to meet the qualification for the long-term climate objectives in Europe. There are things that we have decided that we will not finance anymore. Let me give you one example: airports. We will not finance new airports. We think that this is not consistent with reaching the climate targets that we all have and that have been decided actually at the Paris conference. So all the projects with the high transition risks, basically we pay high attention to that. But in the discussion that we had with the stakeholders last year in preparation for the Climate Bank roadmap, we had a big discussion, for example, on roads. Can we finance still roads or not? And what we have decided is, and that was supported by many, criticized by some, is that yes, we can finance roads, because what we can say is basically the fact is that with time going by, you will have more and more, if not predominant, electric vehicles on roads. And that makes the issue of getting contrary to the objectives of climate, the climate targets, something completely different. And for that, what we have decided to do is to apply in our internal calculation for what is a profitable project from financial, economics, and environmental point of view, a shadow price of carbon that will ensure that the projects on roads that we would finance would be consistent with these long-term objectives. And actually, the climate, the shadow price, to give you just an example, is 80 euros per ton now, expected to increase by 2030 to 250, and by 2050, it will be 800 euros per ton. So that is the way also that we can adjust the strategy consistent with the objectives of the Paris Agreement. Now, this is an ongoing work. I talked about the Paris alignment that we do, but this is based on projects. What we need to work, and actually we will present this year a strategy on that for to our board, is a strategy on Paris alignment of counterparts, so of companies, and this is complicated. So let's. I'm not going to enter into a discussion now because we are working on it, but this is complicated, even if we have already when we discuss, for example, projects with companies that are high emitting, we need to make sure that these companies have a climate target that is ambitious and that is consistent with what we want to achieve. So quite an ambitious policy in terms of Paris alignment that will, and this is part of what we think is needed to achieve the climate targets. Let me finish by saying a few things about why I think it has worked relatively well in terms of convincing our board. You know, in our board there are member states, representatives from member states. So from very, very different geographies, very different backgrounds in terms of energy mix, and of course, what I think there are both external and internal things that we have done that have helped. The first thing that helped was transparency. We have launched a consultation with external stakeholders, so companies, NGOs, all those who have an interest in this have been the project that we had to make comments. We have also received 150 contributions, representing around 30,000 people. And this is the basis on which we have developed throughout the year the Climate Bank's strategy of EIB. The second thing that helped with our stakeholder, with our board, with our shareholders, I think there was two things that were very, very important. The first one is you need to make clear that this is a strategy that has review clauses, that you are not going to set until 2050 what you want to do. And if I can take the example of the Chateau price of carbon, what we made very clear is that that is what we think now, given what we know of the science now. But we will review that regularly, very regularly, to see if it has to be adjusted. And if it has, we will do that. And to have review clauses is also important for the consensus on targets that are ambitious. And the third thing that was very important for our board, in particular for those countries and geographies in Eastern Europe, for example, was that we said that the transition has to be just. That there are countries, there are sectors, there are companies who will need to be more helped than others because they are far beyond others. And we supported that. So there will be more support financially in terms of human resources, etc., to those geographies and to those countries. And actually, the Climate Bank roadmap was approved at the unanimity of the member states at EIB. So it means that to that extent, I think we were successful. Now, internally, what it means.
Ambroise, you'll need to close.
Yeah, two things. First, you need to increase skills for people, and second, you need to make sure that that you have everybody on board. And actually, I think that this kind of project is what is the most motivating for our staff. I'll stop there. Thank you, Siddharth.
So terrific. One thing that came up again and again is that you can't get a solution if you don't speak the same language. That's exactly what Anshula wants to talk about. Anshula, the floor is yours. And 30 seconds before your time is up, you'll see the electronic timer going off.
Thanks, Siddharth, and hello, everyone. It's really good to be here. It's a really early morning for me, but still good to be here. Expanding climate finance is critical and urgent, and given that climate financing commitments have historically fallen short of financing needs. Before I come to my main topic, let me just very briefly say that the World Bank Group is already the largest multilateral provider of climate finance for developing countries, deploying $83 billion in climate finance over the past 5 years. In fact, last year, we recorded the biggest climate investment in our history at about $21.5 billion. And we are on track to exceed this level as we implement our new target of 35% of financing for projects with climate co-benefits for the next 5 years. Looking back to the signing of the UNFCCC in 1992, when we pledged to help our member countries achieve the objectives of the convention, I can say we've come a long way in the climate finance space. Over the past 30 years, we have acquired wide experience in the climate finance arena that can be useful for both MDBs and the private sector. Let me focus mainly on 4 areas. First, the financing part of it. We mobilize significant resources by leveraging capital markets, by engaging with donors, and by partnering with the private sector. We brought innovation into the climate finance space by issuing the first ever green bond in 2008, playing a key role in developing the key green bond market infrastructure through our work on the green bond principles and on the harmonized framework for impact reporting. Today, the World Bank Group issues more than $100 billion a year in sustainable development bonds. The sustainability label reflects our global work in development and also the fact that all our bonds meet the strictest level of sustainability in the Sustainable Finance Disclosure Regulations. Second, the work we've been doing with our client countries. Our efforts range from technical assistance on design and implementation of NDCs to policy advice and advisory on the issuance of sustainable and thematic bonds, development of green taxonomies, and green bond frameworks. For example, in the policy advice space, we supported Egypt to phase out fuel subsidies and encourage renewable energy development. 6 million solar panels later, the Benban Solar Park is employing 4,000 people, generating 2,000 megawatts of power and reducing carbon emissions by 2 million tons, with impact similar to taking 400,000 cars off the road each year. We also assisted Egypt, Nigeria, Fiji, Philippines, to name but a few, with sovereign and corporate green bond issuances, and advised Thailand and Malaysia's public debt management offices on the value proposition and process for issuing sustainability bonds. Lack of clarity about which activities and assets can be defined as green has long posed a barrier to scaling up green finance. We published in 2020 a guide outlining the processes that financial regulators can use to develop a green taxonomy. The guide is backed by our own experience with standards and by the lessons learned from engagements on taxonomies with several countries, including Malaysia. Third, the standards we use to assess our own projects. World Bank is the first MDB to require project assessment for climate change impact through the lens of safeguards, which evolved into Environment and Social Framework 2018. In parallel with developing our standards, we have supported the development and harmonization of environmental and social standards for MDBs, including through the MFI working group on safeguards we established in 1992. Given its work with the private sector, IFC developed the performance standards on environmental and social sustainability that have become globally recognized as good practice and laid the foundation for Equator principles, which have been adopted by more than 90 banks and financial institutions voluntarily. Fourth, as Nandita mentioned, the collaboration with other MDBs, standard setters, and private sector on various climate finance topics. Let me mention just 3 initiatives here. The report on MDB's climate finance, that is annual collaborative effort to make public MDB climate finance figures. The work of the MDB's climate heads group that has facilitated alignment across all MDBs on complex methodologies for counting climate finance. The joint MDB's efforts in developing a uniform set of global sustainability standards for public and private sector impact analysis. Now let me turn to climate disclosures. For capital to flow towards green and more sustainable investments, standardized disclosures need to be both mandatory and enforceable. This will allow financial market players to factor climate and sustainability considerations into their decisions and also prevent free riders from disincentivizing responsible investors. While the landscape of climate disclosures for private companies is evolving, more work is needed in the sovereign and SOE space. We've already moved the needle in this area by launching the World Bank Sovereign ESG Data Platform in 2019. Now we are exploring what a sovereign reporting framework using TCFD might look like. I hear you, I'm just closing. We are also finalizing the development of a climate change toolkit for SOEs. This too is based on the TCFD recommendations. This would enable shareholders and regulators to support and monitor integration of climate change in the governance, strategy, risk management, and reporting of SOEs. Thank you, and back to you, Siddharth.
Thanks. So we've had three very substantive interventions. We'll hear comments from Xavier, Rémy, and Erik, 4 minutes each. And the electronic timer will go on 30 minutes before your time. I know, Xavier, I know that you were off the panel for a little while. I'm not sure whether you were able to listen or not, but your comments on what you've heard, and if you could focus somewhat on what Nandita said. So with that, the floor is yours. You're mute. You need to unmute. You're still mute. Okay, so why don't we do this? We'll take Xavier at the end on the comments. We move on to Rémy, and so Rémy, you heard things from Ambroise about Paris alignment and the challenges of getting there. Comments on anything that the lead speakers said, but if you could focus somewhat on Ambroise's intervention, and after you, if Javier's connection is set up, which I'm sure it will be, we'll be back to Javier.
Thanks a lot, Siddharth, and thanks to you all. Just start by saying how pleased I am to have such a large and conference behind climate. I remember back in 2015 with Laurence Tubiana serving Laurent Fabius when we planted a small seed in the agreement. You know, it's Article 2.1c, which makes the transformation of the financial system not a means to an end, but an end in itself. And we tried then to have all segments of the financial system begin consider what the climate challenge was about. And we are all here now. So the central bankers strongly, private finance, good to see Xavier again, and also the governments and their public development banks. So it's a huge achievement 6 years after Paris to have reached that level of awareness and cooperation. Far from it, of course, but thanks to the organizers for that. And I will especially commend, of course, what EIIB and Ambroise said and are promoting about alignment. You're certainly leading on the multilateral side, and you sent a very strong signal of commitment and transformation with this new strategy, completely consistent with the European Green Deal. And you help operationalize, which is the issue, what being Paris aligned means. And I want to echo what you said. At AIIB, we started it in 2017. I mean, saying we will be 100% Paris aligned. And it means two things for us. Yes, it means align, I would say, the offer side. So our own financing. And so all the tools Ambroise mentioned, an internal shadow price, the taxonomy. We have also a sustainable development independent opinion within AIIB to help verify that all the transactions we are accompanying are contributing positively, or at least are not doing harm. And of course, this is at transaction level, but the next step is to demonstrate that our institutions are fully aligned, and then tap the market with it's 50% for AFD now issuing green or SDG bonds. But in the end, I mean, we should only issue green bonds and be rewarded by the market for that. So that's the first step. But more interesting, of course, is the second step, which is how could we contribute to align the demand side? I mean, we are bankers, so in the end, we want our clients to propose us quality projects. So it means, yes, discussing with our counterparts, especially financial intermediaries. So we have developed at AFD a methodology for that, and also help the governments set the right policies, meaning the right trajectories. This is also what we decided in the Paris Agreement, and put these trajectories, this information, this commitment in the market to orient all the financial actors, public and private. And this is where the recent move made by the IMF and the World Bank is important, to help and accompany the countries to do that. And last point, of course, we have to go beyond MDBs and embark all the public financial institutions. So this is what we are all doing, of course, with our counterparts. This is what I'm doing through the IDFC Club. This is what we are doing together within, I'll come to that later, the Financing Common Summit. And just to give you an example, we just published today at the time of the conference, a tool work within IDFC with a lot of examples and to help each institution actually to be aware and change the way it operates. There is probably no one size fits all for all of us, but progress certainly to be made. And I see a lot of interest in our industry to move forward. Thanks.
Thank you, Rémy. Xavier, should we try you once more before we'll get you on the phone? Because we can see you perfectly. No, we can't hear you. Okay, so we're going to move to Erik, and we're going to connect you by phone. So we can see you perfectly, and the phone connection will work. So Erik, on comments on any of the lead speakers, but like others, if you could focus on what Anshula said. Floor is yours, Erik.
So thank you, Siddharth, and very honored and pleased to be on this panel. So I'm supposed to focus mostly on Anshula, and I listened very carefully to what she said, and I think there is a lot there that is very important. But I wanted to take it a little bit to a higher level, perhaps, and think about two things. One is this need to find common frameworks, and I mean, you talked about all the work that you have done at the World Bank, and it's extremely important. You know, my concern in this area is that we are, and this is going to be a very important reason for why the NDBs should be involved, is that we are risking creating two worlds. That you know, a lot of these initiatives around ESG have a very strong bias against emerging and developing economies, and they are very strongly correlated with GDP, and that I mean in a negative way. And many of them even explicitly rule out. Many of the investors employing these frameworks are ruling out investing in emerging and developing economies. And of course, I mean, if we understand that there is a correlation between the quality of these ESG frameworks in advanced and in developing emerging economies, but we have a huge responsibility, and as MDBs, that is, I think, where we really have to put a lot of effort, because you know, otherwise we risk that ESG becomes another way of consolidating what we now see emerging after the pandemic, this real divergence between emerging and developing economies. So yes, we need to find the common taxonomies. We need to work together on this, but it's extremely important that the MDBs play the role here and make sure that both that we are getting the right taxonomies that are not inherently biased, but also that we help our countries get in place much better framework. The second point I want to make very quickly, and of course it's a very general and well-known point, but I think it's something we also need to take into account. And I didn't hear so much in Anshula's speech about this. It is how we measure things here and how we deal with the impact. I think I don't want to stick my head out, but when I look at the work that's been done, maybe 5% of the green financial instruments are additional in the strict sense, and we really have to come to a world where we have much more stronger links between the issuance and what's happening in the underlying assets and what the real impact is, because otherwise I think we are risking a very major backlash, and there is a lot of work going on now trying to improve that. But again, here I think the MDBs, which they have a tradition of measuring impact of what we are doing, we should really take that responsibility seriously, because this is a huge opportunity that we can miss if we don't get in place serious impact measures. And that, of course, that relates to both at the level of investors and in individual corporates. So it's a very important role for MDBs to play. Thank you.
Thanks. Xavier, do you want to test your connection?
I can try.
Oh, it's terrific. You always amaze me. The first time was in 2012 in Korea. And so the floor is yours. Perfect.
Thank you very much. I'm sorry, because in fact, remaining silent would have been an opportunity for my colleagues to express themselves longer, and apparently they decide to do so. And they said such interesting things that it's a pity that I'm able to speak now. Nevertheless, I want to make some brief remarks. First of all, I think that one of the themes that has emerged from our discussion is this need to speak the same language, which lead to the issue related with taxonomy, and also to a certain extent the role then EDBs can play in this, multilateral banks can play in this field. And I think that's a very important topic, because indeed what we see now is the emergence potentially of different standards, different measurements, different taxonomy. And you know how difficult it is in Europe to get conclusion on that. We hope that we can have a good result. Nevertheless, it's a long process. So I think that in parallel of all these public efforts, the private sectors and multilateral banks have a role to play in helping standards to emerge, in order to allow the private sector to make progress, not waiting for the final results of this public discussion, which could also be different depending on the different regions. And therefore, I want to put the stress on what we did with some of our colleagues which are here in this room or represented in this conference, because I think it's interesting. Just to give you a few examples, with our friend Ambroise with the AIIB, we have set up what we called the Green Credit Continuum. Amundi did that with the AIIB, which is a continuum in which we invest. There are green high yield corporate bonds, green private debt, green securitized debt, and there is a scientific committee which made some conclusion and try to draw some lines in order to inspire the market, and we are obviously willing to share the best practices resulting from the experience with the rest of the market. And the same with our friend from AIIB, also present on this call. Through the prototype we have set, Amundi with the AIIB, aligning investment with the three objectives of the Paris Agreement: transition risk, physical risks, contribution to the transition. And again, this framework is freely available. Last example, which involved one other participant, which is not on this call, but which attend this conference, which is AP4. With them, we set the first mainstream low carbon index 10 years ago, and I think that this experience was very interesting and inspiring. There are a lot of pension funds following AP4 and the French FRR, which use now this framework. And apparently, according to the Harvard Business Review, there are $50 billion invested through these indexes. So I give these few examples just to illustrate the fact that MDBs and also private investors can show the way in the direction of trying to, I would say, set new principle and help the public sector in its effort to make standards emerge. Thank you very much for your attention.
Thank you very much, Xavier. We're going to move straight into the second segment on leveraging the private sector. The roles are reversed now, with Erik going first on generating a pipeline of investable projects. Erik, the floor is yours.
So thank you very much. And maybe I'll start where I ended up in my comments to Anshula, that we have this opportunity to get major finance to emerging and developing economies. And actually, when I talk about impact and really getting real impact from our investments, this is more likely to happen, I would say, in emerging and developing economies, and that's where additionality is likely to be greater from these types of financing. So I don't want to kind of play the role here of playing the different institutions represented here against each other. I'd rather take a step back and again look at the sort of role of MDBs. But from AIIB's side, we have climate is clearly our number one priority. It's the only objective where we have set in our recent corporate strategy a target for 2025, and we want 50% of our investments to be climate related. And of course, we are also working and will this year announce our alignment with the Paris Agreement. But what I want to say something about for people who are not working in these institutions, and for those that wonder why are we working in this space and what can we contribute, because there's a lot of knowledge, a lot of experience out there, and a lot of financial innovation and so on going on. But I think there's still a very important role for the MDBs in generating projects, but also, of course, in bringing investors to these projects. Of course, the projects, and here we're talking sort of bankable projects that we can attract investors to. Of course, they don't. They come. They're defined based on what risks there are, and we have already mentioned some of the risks that are involved, and that makes it difficult for investors to go in, and particularly institutional investors find it very difficult to deal with certain types of risk. And here, I think is where the MDBs can play a very useful role. And I would focus on two types of risks. One is the policy risk, and we talked about frameworks and so on. But I think across all institutional or all infrastructure investment, policy risk is the greatest single risk. But it's particularly true in the sustainable infrastructure investment area. And here, MDBs have a very important role in anchoring expectations, anchoring investment in individual projects. The second role that I think is also very important, and I'll give you some examples in a minute on how AIIB has tried to contribute in this space, is around construction risk, because a lot of, or maybe most institutional investors cannot come in and take that kind of risk. MDBs can do it, commercial banks can do it to some extent, and I think here the role that MDBs can play is to try to maybe bring in, after the construction risk has been resolved, there's an opportunity for maybe other investors, institutional investors, to come in, and that's a role that I think MDBs can play to bring them in, and I'll give you an example in a minute of how that can be done. So of course, there's also, the very important role of MDBs of providing credibility to particular frameworks that are out there. And Xavier, Musca mentioned an example that where AIIB and Amundi have worked together on establishing such a framework. I'll say also a few words about that later on. But of course, then the final role, perhaps, of that I want to emphasize is, of course, the role that MDBs can take on some of this risk on their own balance sheets. But there are very important limits here, and we should not forget them. And once you work in these institutions, you realize that actually the scope it's much less for individual institutions. But what we really need to think about, how can we work together? How can we maybe by pooling our balance sheets or using a joint insurance or guarantee mechanism, how can we further help bring finance to these projects? And of course, a role that many of us also play, which is important, is in the project preparation stage, because we know that preparing project was always very costly, but of course the increased costs associated with preparing the projects and the costs associated with following procurement, competitive procurement, and so on, competitive bidding, that has created issues for investors. So we need to provide subsidies and or contributions to investors to encourage them to prepare projects. Maybe I'll stop here. Thank you.
Thank you, Erik. We'll move on to Rémy on scaling up DFI's own operations, and the ICFD has it's a huge balance sheet of 4.5 trillion if you add all the members, and it's a huge challenge bringing alignment and scaling it up. The floor is yours, Rémy.
Thanks a lot, Siddharth. Yes, a few comments on how to scale up the public development bank's operation, but of course with the private sector and to work together. And I will start with what Erik said. Yes, this Green Swan conference is extremely important. We are talking a lot about risk measurement, all of us. We are talking about strengthening what regulators will do for climate. We are talking about carbon pricing to reorient more flows. But if not properly managed, all these tools can only increase the decoupling in the global economy and reallocate savings and investments in a very detrimental way to emerging and developing countries, where are most of the opportunities for high return and for the fight against climate change. So we need also to push for, I would say, beyond regulation, to a more positive, ambitious, counter-cyclical, concrete financial contribution of the banking system, meaning the private banks, of course, but also identifying more clearly what the public banks can do in the coming years and decades, and help, of course, lend all the liquidity around in quality and bankable projects, way more than today, because we are not originating. There are gaps everywhere, also in advanced economies, especially on infrastructure and long-term investment. And I think the timing is right, because we are at a moment when it's no longer, Xavier said it, about competition between public and private. I think all the public development banks, they have realized that they are not at scale, and they have realized that they need to do more to mobilize the private sector. Maybe our shareholders have not completely got it right now, but certainly it will come. And on the private finance side, I think there's also a lot of interest, because I feel that many colleagues, they know their business model is changing because of climate, and probably, like, we have to convince our shareholders, they have to convince their shareholders that yes, we have probably to be a little bit more patient, a little bit more insistent on the impact, and we need time to change our business models. And that's where so many private actors are now turning to public banks for various de-risking instruments, just to give time to the system to adapt. And for this, we need to have the discussion at the high level, because my understanding, my experience is that the world of public banks, DFIs, whatever you call them, is fragmented, and was fragmented for way too long. And so we had no voice to discuss with the government. We had no voice aggregated to discuss with the central banks, where they have BIS, they have NGFS, they have their own fora, and we had no voice combined to discuss with AIIB, or private finance. And so this is what we started launching last November, what we called Finance in Common. This initiative was exactly that, to create a place where all together we will be able to contribute more ambitiously and more collectively. So it's Finance in Common is the coalition of all public development banks. So we found 450 of them worldwide. We are revising the database that is public, and I think we're more than 500 right now, because there are also public banks emerging, as always, in a crisis, and doubling their balance sheet somehow. So meaning the voice of public investment, actually, alongside the voice of the fiscal capacity of the governments, the voice of private finance. And Finance in Common is also movement. I mean, of course, a place not for the public banks by themselves. It has no interest, but a place where we would be able to dialogue with other stakeholders. There will be a new occasion to do it. So maybe you heard Mario Draghi during the last climate summit, leaders dialogue on climate, that announced that there will be a second Finance in Common summit hosted by Cassa Depositi e Prestiti and IFAD in Rome, end of October, just before the G20 summit and COP26. Italian colleagues, of course, because of Rome, and also because this is such an old and market failure, they want to work specifically on the financing of agriculture, agro-business, meaning adaptation to climate change, biodiversity, this nexus of issues where public banks have a lot to say. and where innovative schemes are emerging. But it will be also a moment probably to highlight various, Xavier was mentioning a few of them, cases of cooperation between public and private that are too small for now. I mean, and we all know that we have to scale them up, and there's no place for now really to share it in a very technical and hopefully political way. And so count on the whole community of PDBs, many colleagues here in this room, to share their experience, to provide the training, the skill building, and to innovate, hopefully. And I close by saying that, of course, alas, because of the crisis in 2021, we certainly have a unique opportunity to really structure and incentivize the whole community of public banks as a system. And I'm thinking very concretely about the SDR issuance. So maybe time has come to innovate on the use of SDR. President Macron, with more than 30 European and African heads of state 2 weeks ago, published an op-ed and a declaration to propose to, put, the World Bank or the African Development Bank, maybe AIIB at the time, you are already prescribed holders of SDR. It was approved years ago by the IMF board. Why not help the other public banks, I mean regional and especially national development banks, to have access through quality financing through their regional multilateral platforms and irrigate, strengthen the whole structure. And of course, again, to mobilize the private sectors, to originate more projects on the ground. And this is where also, and I close by that, we need maybe by the G20 summit to receive a way stronger mandate to mobilize private finance. I mean, myself at AFD, I have no mandate to mobilize private finance. And we know that it's more difficult to go and discuss with Xavier and the others than to do it by ourselves. And as long as I am only rewarded for my own financing and not for the volumes mobilized with other actors, be they public and private, I think we're stuck in the middle of something very big that we would like to unlock through financing common. Thanks a lot.
Thank you, Rémy. Several of the interventions are leading to you, Xavier, on de-risking, the role that Amundi played. They go all in your direction. So with that, the floor is yours. 5 minutes, please.
No, I thank you very much for that. And I'm very pleased to rebound on what Rémy has just said. I think that really, MDBs and public banks have historically played this role to channel savings from the developed markets towards the emerging or the developing countries. And that's the historical role, and it has to continue. And through the experience, MDBs and public banks has built an extraordinary experience. They have the legitimacy, they have the knowledge of the market, and they protect private investors from the political risks. All of this has been mentioned. But the key question, and Rémy has been very eloquent in that, is that at that date, the size of the needs is so huge, and the discrepancy with what public finance can do and the needs on the ground are MDBs and public banks are not well fitted for filling this gap. And we all know that we need to invest until 2035 more than $3.7 billion each year, and 1 billion more each year if we want to reach the United Nations goals, if we want to ensure the climate transition. So huge amount of money, 60% of it in the developing world, and MDBs which are stuck with a problem which has been alluded by Rémy of lack of clear mandate to raise the money, or difficulties from the budget side in different developed countries to make the necessary efforts in this regard. So I think that the solution is indeed, as it was mentioned, relying on partnership between the private and the public sector. I gave a few minutes ago some of the examples. I think that one of the most interesting one is what we did with the IFC, with Amundi and IFC, by setting a structured fund, investing in a green bond issued by banks from emerging market economies. It's now reached the level of $2 billion. And the structure of the fund is that there are two tranches, a senior tranche and a junior tranche. The MDBs have placed themselves mainly on the junior tranche. It was obviously the case of IFC, but AIIB and EBRD have invested in both tranches. So that's the way for them to give a guarantee to other investors, private investors, to invest. And I think that the beauty of this model, which has proven to be resilient, we have known some of the crises. There were countries defaulting, Lebanon, for example, during the last years, is that nevertheless, it has allowed private investors to get a decent return. And it has also allowed the public sector to get, again, a return which is quite significant. But above all, it has educated the market, it has channeled money, and I hope that this kind of experience can be replicated. And as Rémy said, you know, I think that the question of size is very important. We are not yet at a level which is needed in order to meet the challenges we all know and which are huge. So again, I think that there is a wonderful opportunity. There are extraordinary capacities in public banks and multilateral development banks. There is a lot of savings, as we know, in the developed world. The combination of all of that can be extremely powerful. It depends on the political will. It depends on the mandate given to the multilateral banks. It also supposes a cultural change in these development banks. They have to accept that their role is not 100% public, but it is to bring public goods to the whole community by associating themselves with all the dangers, with all the political difficulties associated to that, and I don't ignore them, with the private sector in order to have the good leverage and be as efficient as possible, far beyond the small resources which are associated with their traditional role. So that's my key message. Again, we have few experiences. They work quite well. We are not alone. I think that a lot of institutions can play also this role. And I have to say that we have built through the experience also a kind of understanding with the constraints, the requests from the public sector, which is also something very important because private investors don't immediately realize what are the constraints for the public banks. While on the other hand, the public banks have also to accommodate the structure they're offering to the private sector in order to make sure that there is, I would say, a smooth transition of this money from the markets to the needs of the developing countries, which supposes that from the few experiences I mentioned, we go to a more industrial model. Thank you very much.
Thank you, Xavier. We are running behind on time a little bit, so we're going to cut for the last set of comments to a minute and a half each intervention. So we start with you, Ambroise, including, I'll take a question that's come in, that every bank is financing more and more climate compatible projects, but CO2 emissions keep going up. How do you bend the curve? Comment on either the panel or the question.
Okay, thank you, Siddharth. Well, I will be brief because I I am very much in agreement with what Erik, Rémy, and Xavier have said. I think we all agree actually on this. And from my standpoint, there is a quantitative aspect of it and a qualitative aspect. The quantitative aspect, I'm not going to repeat it, but what is important is that we will not achieve the targets without the private sector. It is clear. So we need to find the right structures that will allow maximum leverage and private sector investors to join projects. So that I think is important. And the second one that has been said by Xavier also is when we define new products, we should try to look at replicability. What is going to be able, to be developed in many geographies, in many countries, so that we can gain time, and also we can apply leverage. And in terms of qualitative, the good examples of my colleagues, I would just say they show that where development banks are useful is to look at market failures. And there is a market failure when you have green bonds in developed countries and not issued by emerging markets financial institutions. And when you don't have them, as Xavier said, all over the curve in advanced economies. So we need to look at, and this is where public development banks can be helpful. I will finish by saying there is something that is also important in terms of market failure for me. This is the financing of innovation. We know that we need to have innovation if we want to reach the targets that are not going to be, we don't know yet what's going to be these innovations, but they are absolutely essential. It's difficult for private sector to finance that or to finance that alone because they are very risky. And this is also where you need public development banks. And on your remark, just in 10 seconds, Siddharth, I look at the glass half full, and I am sure that the situation in terms of the involvement of the civil society, of the public opinion everywhere, of the private sector, of the public sector, means that I am very hopeful about reaching the target. Thank you.
Great, thank you, Ambroise. And you answered another question that had come in through the chat also. So we'll move to Anshula. We're out of time, but 1.5 minutes plus. A question that says, what are the prospects for increasing grant-based climate financing in the short to medium term?
Thanks, Siddharth. I think, as Rémy and others have mentioned, I think what I'd like to underline that private investors need policy frameworks for sustainable investment, and they require investable opportunities that match their risk-return appetite. And it's partially answers the question that is being asked, that what are the nature of innovation that we are trying to rope in the private sector investment into climate finance. So there are many examples that come to mind, but I'll really start with the AIIB private sector window. As you know, AIIB caters to the most vulnerable and lowest income countries in the world. So this private sector window was created under AIIB 18 as a $2.5 billion facility. The private sector window crowds in private sector investment in AIIB-only countries. It leverages IFC's and MIGA's business models and client relationships. Through different facilities, it backstops or blends with IFC investments or MIGA guarantees to support private sector investments. And thanks to the de-risking from this AIIB PSW, IFC and MIGA have been able to pioneer energy efficiency and renewable energy projects in the most vulnerable and challenging markets. Projects supporting wind power in Djibouti, solar powered energy solutions in DRC and Rwanda, solar power in Malawi, and geothermal power generation in Ethiopia are increasing access to energy in AIIB countries and enabling the provision of clean energy to rural and underserved communities. And, there are many other ways that IFC, for instance, they work upstream in very, very challenging environments to create the policy and regulatory environment for private sector investments to come in. This creates opportunities that allow the private sector to play a meaningful role in sustainable economic recovery while reducing reliance on government debt. And, for over 15 years, IFC has actually been employing blended finance using relatively small amounts of concessional donor funds to help mitigate investment risks and enabling pioneering investments that can't proceed on strictly commercial terms. And let me just say this, as I guess you would know, we are currently in the process of the AIDA 20 replenishment, which has been, brought forward by a year. And, climate change continues to be a focal point in this replenishment. So the effort here is to help countries recover from COVID-19 crisis and transition to green, resilient, and inclusive development. Ensuring alignment with Paris Agreement, AIDA 20 will help countries, and these are the most vulnerable countries, step up support for a just transition while emphasizing the need to boost support for adaptation, nature, biodiversity, and transition of key systems. And as you know, AIDA financing is highly concessional or very much on grant terms. So I hope this answers the question as well as some comments from me. Back to you, Siddharth.
Thank you. Thank you so much. So the organizers, I'm part of them, have given us a bit more time to get through it because we are falling behind. So with that, I would move on to Nandita for the final set of comments on leveraging the private sector. Nandita, the floor is yours.
Thank you, Siddharth. And I know that I have to be very, very brief, and I will be, because so many panelists have already said most of the things that I'd want to say. But maybe I'll just pick up from where Anshula left in her comments, which is, I think the one thing we also need to all focus on is actually creating those underlying assets. So yes, we need political will, we need all this work from governments, we need to attract private capital, but we're not going to do this unless we have projects, real projects in emerging markets that are bankable. And this is the upstream work that Anshula referred to, that the IFC are focused on, and we are as well. Because unless we start to have assets that really have impact, and Erik made this point, that unless we can actually have impact in these countries, we can have all the green funds and we can have all the taxonomy, but we're not going to have the impact on the ground. And so just to summarize here, one of the things that we're very focused on in EBRD is creating more projects. Because all of us here on the screen know how a bun fight can develop between DFIs and IFIs on one good private renewable project in any one of our countries. And that should just not be happening. We should be having gazillions of these projects so that we can all use our money and mobilize and leverage as much of the private funds as we can as well. So I'll just leave it with 2 points on 2 areas in which we're doing this. One is a real focus now in working in all of our countries, and we're working, I think, in 14 already, on designing renewable auctions, designing bankable renewable auction frameworks in countries. And these are not just about doing the first 100 megawatts in a country, but it's, to Ambroise's point, about replicability, having frameworks whereby those countries can then issue projects for the next 10,000 megawatts. And these are exactly the projects that can bring private sector investment, but can also be the underlying assets for the kind of Amundi green funds that we're talking about. So these kinds of assets are going to be very important going forward. And the other area we're very focused on now is actually working with cities. Cities are contributors to 2/3 of global gas house emissions. And so we've started something called our EBRD Green Cities program. We now are up to nearly 50 green cities, where we are working with cities to identify bankable, transformational, environmental and green projects. And we're already beginning to see a pipeline there. And so I'll probably end here by saying, Xavier, maybe the next innovative fund we should be looking at is, what do we do for cities going forward? And this is an idea that I think we ought to be exploring as well. And I'll leave it to that. Thank you.
Xavier, thoughts on the last question before we wrap up?
No, I don't want to use more time, but
no. Go ahead.
As a proposal, And I'm very happy to try to answer to it immediately. My teams will start immediately the work, but I agree fundamentally with the need to do something in this area.
Thank you. Look, I'm not going to summarize at all. I was told when I took the panel on that we need to have 2 practical additional solutions, and I've noted a whole list of suggestions from this panel. I think in just closing from my side, that we at the BIS have help central banks channel some of their own reserves into green finance, and we have 2 funds, and we've invested in some of the participants on the screen here, their institutions, and we're looking at starting a 3rd one, an Asian Green Bond Fund, to try and put money into a region which will likely have the maximum needs in the next 10 to 15 years in terms of infrastructure. Some of it was quoted by Xavier also. And many ideas came out here where central banks could work with your institutions, and Anshula had mentioned earlier that process is already underway at the World Bank, where they could work with your institutions to move the boundary forward in terms of generating a sustainable pipeline. So with that, I want to thank you for your participation, and it's been a terrific panel, and I will hand it back to the organizers now. It's back to you.
Thank you, Siddharth.
Thanks.
Good to join you all. Thank you. Bye-bye.
Yeah, good to see you all.